Hi everyone, Kathleen here, Research Director at XTB. Believe it or not, we're halfway through Q1 already. This has been a busy start to the year. President Trump's economic changes, his tariff threats, and the latest round of earnings reports have all been pivotal for asset prices. At this stage of the quarter, European equities are outperforming US equities, and within the European space, the Eurostoxx index is higher than the FTSE 100. Top performing stocks in Europe so far this year include European banks, Hermes, and industrial companies like BASF and Siemens. This highlights how broad-based the rally has been in Europe, which is one of the European market's greatest strengths. The weakest performers include alcohol company Pernod Ricard and Stellantis, the Italian-listed car company. But in the last 5 days, some of the car makers have come roaring back to life as Trump's European tariff threats get kicked down the road to April at the earliest. Financial markets are willing to look through tariff threats for now, and momentum is helping to sustain the stock market rally in Europe, along with a preference for value stocks. At the start of the week, European bond yields are rising sharply. That comes after the EU pledged to boost defence spending as an overture to President Trump and his demands for the EU to pay their share when it comes to defence. BAE Systems, the UK defence manufacturer, is one of the top performers on the FTSE 100 so far this week, and it's helping to lift the UK index. There are some key events to watch out for this week that could lead to some volatility for financial markets. The UK CPI data will be crucial, especially since the pound has started to recover versus the US dollar, and the pound-dollar rate is now above 125. This is a key psychological level, and above here there isn't much in the way of resistance until 126.70, the 100-day moving average. The market is expecting inflation to rise in the UK for last month. The headline rate of price growth is expected to rise to 2.8% from 2.5%, while core inflation is expected to rise to 3.7%, and service price growth is expected to rise back above 5% to 5.1% last month. This jump is expected, and the Bank of England doesn't expect UK inflation to fall until April, so the market may look through the next few months' CPI data. Now, this is important since in recent months, higher inflation has spooked investors in the UK, and it's weighed on the pound and dented sentiment to other UK assets. For now, we don't see this week's CPI data weighing on the pound, unless we see a large upside surprise. And finally, there's one asset class that is outperforming the rest: precious metals. Gold and silver are outperforming global equities so far this year. Gold is comfortably above $2,900 per ounce, even though it's below the record high of $2,928. It's still higher by more than 10% so far this year. While stocks and currencies continue to perform well, the fact that the gold price is rising sharply is symbolic. It suggests that investors aren't 100% convinced that the market rally will continue in the face of geopolitical threats and Trump's new economic policies, which is why investors are looking for a safe haven like gold. Part of gold's increase is demand from central banks. This suggests that institutions and central banks could be moving away from the dollar, which also supports lower US dollar going forward. That's all for now. Thanks for joining, and good luck trading this week.